Welcome back to the A4S Summit. And for the rest of the day, we're going to be focusing in on reporting. There have been huge developments over the last year, so we're going to unpack those developments for you, talk to some of the leading standard setters, but also look at it from a practitioner and investor perspective to help you navigate your way through. So I'm really pleased to have with me for this session Susanne and Ndidi. So Susanne is the CFO of De Beers Diamond Trading, and prior to that has been worked at Deloitte and has an extensive background also from that audit perspective. So in terms of discussing developments in reporting and how to apply them in practice, Susanne, fantastic to have you with us. And also Ndidi. So Ndidi is the full-time member of the ISSB. She has particular responsibility for Africa, but also, again, a business background prior to the ISSB. So can, I think, empathize with those who are starting to adopt the ISSB standards. And in this session, we really wanted to get into some of the latest developments. So everyone, I think, has been following Ndidi the developments from the ISSB very closely. And the first two standards were launched this year. So I think really exciting to see how quickly we've come to that really big milestone. But now, of course, it's all about adoption. So can you get us going by setting out briefly more about those two standards and the scope of them?
Gladly. Thanks for organizing this and thanks for having us here. We're particularly pleased that really just 6 months after the first full board sitting, we were able to launch the first few standards, S1 and S2. S1 really speaks to the general requirements for the disclosure of sustainability-related financial information. Just as an overall, the IFRS sustainability standards are specifically to help provide decision-useful information for investors, and also building on our mandate to reduce the alphabet soup of standards. What we have is we have the TCFD, which was folded and we became custodians of in July, shortly after the standards were launched. And of course, the TCFD has the 4 pillars of governance, strategy, risk management, and then targets and metrics. And this really forms the structure of both S1 and S2. S1 is the overriding structure of the standards that will follow. So S2, which focuses on climate, requires the use and the reference to S1 for its use. It asks for disclosure of material information about sustainability-related risks and opportunities. And it does require also that ultimately, within time frame of transitional reliefs, these sustainability-related disclosures will be disclosed alongside the financial statements in order to meet investor needs. It builds on the TCFD architecture, those 4 pillars that I just described, and also specifically requires industry-specific disclosures. What we know is that the disclosures and, of course, the risks vary across different industries. And so we've built in the SASB industry standards. We internationalized those. That's one of the main pieces of work that we did this year. And we consider these industry-specific disclosures also to be a proportionality measure. So for those who are newer to sustainability reporting, it's actually quite easy to pick up the industry-specific disclosure that is relevant to your industry and gain an idea of the types of metrics that investors look at in that regard. S2 speaks specifically to climate and also builds on S1. S1, of course, defines what materiality means. For S1, materiality is defined in exactly the same way as it is in the accounting standards, which are used across 140 jurisdictions. So technically, information is material if omitting, misstating, or obscuring it could reasonably be expected to influence investor decisions. That's very important. And also our description of sustainability and how it affect a company's prospects references the value creation. So we recognize that value creation for investors is inextricably linked as well to stakeholders with whom an entity works, the society and the economy in which it operates, and the natural resources which it draws on. And this is something that we've drawn from the integrated reporting framework, which is also a body of knowledge that we have acquired. Now, when you move on to S2, it also references and requires industry-specific disclosures and requires the disclosure of material information about climate-related risks and opportunities. Used in accordance with IFRS S1, it's the first standard that we're asking should be applied. And in that regard, what it also references is not just the response that a company has and the strategy that it has for managing its climate-related risks and opportunities, but it also requests things like what is its approach to transition planning and specifically also scenario analysis. It also requires scope 1, scope 2, and scope 3, but with transitional reliefs applied appropriately to scope 3. What's also worth mentioning is that, of course, the transitional reliefs, and there are significant transitional reliefs that have been applied across both standards that can be adopted and adapted by the regulators in the jurisdictions where these are being applied.
Thanks, Ndidi. I think that gives us a really good overview and hopefully helps people to ground not only what's in the standards, but also the point that you were saying there around transitional relief, because of course they're intended to be a global baseline. And I think it's really important, therefore, how different organizations are going to be equipped to apply them. Susanne, I'd love to hear from you in terms of that preparer's perspective. So can you say a little bit about how you've reported on your performance and impact to date? And then secondly, how you see that changing or how you're starting to think about the adoption of IFRS S1 and S2 now that they're launched.
Thank you, and thank you for having us here today. So diamonds obviously brings lasting beauty to the world, but they actually do so much more than just bring beauty. So for us, our diamonds and our business make an impact on a much deeper and a much meaningful way. And it helps for us to, bring and make life brilliant for our people, our host countries, our clients, and the world around us. So as you know, we say that diamonds are forever, and therefore our sustainability framework is built on what we call building sustainable communities far beyond when the last diamond is mined. So we call our sustainability framework Building Forever. So every year we work with our stakeholders to identify and address key existing and emerging topics that impact them. So these topics, along with the Global Reporting Initiative standards, guide our sustainability reporting. And we publish this in an annual sustainability report. So the De Beers Sustainability Goals has 4 key pillars, which is what we call leading ethical practices across the industry, protecting the natural world, partnering with thriving communities, and then accelerating equal opportunities. So that has been what we've been doing so far. Obviously, with the introduction of the standards now, and Ndidi has talked a little bit about, what S1 and S2 actually require. So I'm not going to go into it. But if you look at what we are now looking to, or what we would now need to sort of bring forward and disclose, really is around what does this mean, not just from a sort of sustainability perspective, but what does it mean really for the community? Because that's where we would need to try and sort of elaborate a little bit more. So for example, if you look at scope 1 and scope 2 greenhouse emissions, if we're applying IFRS, we would need to practically disaggregate this information between the parent and consolidated subsidiaries, which in the past we didn't really need to do. So for scope 2, we would need to now sort of disclose the locations, the emissions per location, as well as trying to understand what are some of the contractual obligations for these obligations. And let's not even go into scope 3, because imagine that where you needed to sort of start disclosing the absolute greenhouse emissions generated during this reporting period. So, you know, for a sort of a mining entity like this, which has a number of subsidiaries, it starts to paint a picture of how complex this could start to be. But, you know, with the launch of S1 and S2, we do anticipate significant changes in how our reporting will start being. These standards do compel us to broaden our disclosures to encompass a more comprehensive range of non-financial information. Our reporting will obviously have to integrate, you know, the sort of financial and non-financial data more cohesively, trying to provide stakeholders with a more holistic view of our sustainability efforts, as well as our ethical practices within the diamond trading industry. It will be an incredibly complex, you know, trying to put everything together. Bear in mind that if you look at the mining entities, we are required to report this beginning 1st January 2024. So that's just really just around the corner. So I think there's a lot of work that will need to be done to try and bring this together.
That's great. And so it sounds like, you know, you've been using some of the voluntary frameworks, and you touched on GRI there, but as this becomes mandatory, and particularly that point on some of the value chain requirements and scope 3, some more work that's needed to really align also with S1 and S2.
Absolutely.
And as a CFO, can you say a little bit more about how you and your finance team are working with others in the organization to get ready for this evolution in reporting?
Yeah, so I think maybe let me talk a little bit around, you know, what this means for us also looking at the value chain. So I think if you look at the emphasis on the value chain, it does necessitate, you know, concerted effort in trying to collect the data, as well as how to standardize that data. So for us, if we look at the value chain, looking at the full range of interaction, our resources, our relationships, and here you're looking at the communities, you're looking at the government, you're looking at your suppliers. So it's really around also, you know, going from exploration to producing to selling the product. So, you know, the value chain is quite extensive in the mining industry. But it's not just operations, because now when we start looking at the standards and the value chain, what has changed now is all the sort of other people that come into play. So here you're talking about your people, your human resources, your distributors, your finances. And for us in this, you know, diamond space, there's a lot of obviously geopolitical and geographical issues that we have to bring into the forefront as well from a sort of sustainability perspective. So from, you know, the sort of CFO and finance team, what it means is that there's a real challenge of trying to gather and validate the data sources across the various stages in the value chain. And if we look at this from a reporting perspective, where we are required to now disclose information about the sustainability related risk and opportunities that could impact our cash flows and access to finance and cost of capital in short, medium, and long term, you know, so as a CFO, you know, you can no longer just limit yourself to the financial reporting. What it means is that you really need to collaborate with internal departments and external stakeholders. And it's really crucial to be able to ensure that the data accuracy is and the consistency is of paramount importance, you know, and I think it's in a business now, it's really trying to understand and establish common frameworks to be able to capture the data across the different operations, across the different reporting methodologies, and across the different jurisdictions. So it's really going to be a mammoth task, but what it will mean is that there has to be a standard framework such that we will be able to standardize the reporting for it to flow up properly as the information is consolidated upwards.
Yeah, and I think the point there around also investor demand for this kind of information, came through in the last session that we had during today's summit of looking at financing solutions, and the investors there were talking about transition plans as a key input to their own financing decisions. Indeed, to the point that Susanne was just talking about there, as we touched on at the beginning, ISSB has that ambition to be a global baseline. And from the work that we do with both CFOs and investors, one of their top requests is always around global consistency and the need for globally comparable data to drive different decisions. Can you say a little bit about the work that the ISSB has been doing in terms of adoption of the standards? Now that they exist, organizations can endorse them and then they can be adopted into different jurisdictions. So can you say more on that?
We're very fortunate because we came about as a result of strong market demand. So really, because investors, companies, and international policymakers like the G20, G7, IOSCO, the Financial Stability Board, who also even essentially handed over to us the TCFD framework subsequent to the launch of our standards. What that did is it created the platform and the basis to build what we're calling a truly global baseline, creating decision useful and comparable information, particularly for investors, and particularly for the point that Susan raised in terms of unlocking capital flows as a result of sustainability related disclosures. And in that regard, from the very beginning, we had a jurisdictional working group that had 5 key jurisdictions participating extensively in terms of shaping the standards from board meeting to board meeting. So we had that meeting convene every month. And of course, as you know, the standards were themselves shaped by 1,400 comment letters that were received from the whole world and a range of stakeholders. So in that regard, working towards building that truly global baseline of disclosures, one of the things that's really important in terms of jurisdictional adoption is what we've called the building block approach, so that the baseline can be added to meet jurisdictions' specific requirements, and you can also add it to broader multi-stakeholder needs. So for example, working with the ISSB standards, you can also at the same time work with the European standards. And to use that as an example, we are going to publish a navigation tool that allows jurisdictions to navigate between the ISSB standards that are truly global in their nature and more jurisdiction-specific standards like you have in Europe. In that regard, the IOSCO endorsement, which we received in July, which covers, of course, 130 security commissions across the world, was a major endorsement saying that the standards are fit for purpose for capital markets, and that it creates that additional level of trust in the ISSB standards in that regard, as well as the commitment that we made very early at COP27 to support with capacity building at a jurisdictional level with the preparers, with investors, but also with regulators. That also helped a lot, so that we saw as early as COP27, Africa leading on adoption. So Nigeria was the first country that indicated its intention to adopt these standards, and they were very quickly followed by Ghana, Kenya, Zimbabwe. Right now I'm sitting in South Africa, and we have meetings over the next 2 weeks with the regulators here who are exploring exactly what adoption looks like and what transitional reliefs to apply. Very important is that, of course, the transitional reliefs are applied and adopted at a jurisdictional level. We're also working on an adoption guide, which really helps in terms of, jurisdictions knowing exactly how to develop their roadmaps so that they're qualifying for the adoption of the standards. And we're speaking with a number of jurisdictions that have stepped up to lead. So other than the African countries that I mentioned, which also include others like Egypt and Mauritius, we're also in dialogue with Australia, Brazil, Canada, Hong Kong, Japan, Mexico, Singapore, the UK, the Philippines. Brazil most recently actually is very clear on the date that they're going to make these standards mandatory. And what we're also finding in some jurisdictions is that the regulators are encouraging preparers to begin to use S1 and S2 in preparation for this becoming mandatory in their jurisdictions.
And I think that a lot of what you were saying there talks to both start getting ready now. That's a lot of countries that you mentioned, a lot of jurisdictions. So if organizations haven't already got familiar with the standards, then as soon as possible, because as Susanne, you were saying earlier, there's quite a lot of preparatory work, even for organizations that have prepared sustainability reporting for a long time in terms of the expectations on the quality of disclosure, but also the sustainability understanding and therefore demand for the kind of information is evolving all of the time. And these standards are built on a strong foundation with TCFD. You mentioned Ndidi, the work around integrated reporting, ISSB standards, and of course, a lot of the current developments around things like transition planning, which connect into some of those issues. In terms of the whole question of interoperability, you briefly alluded to that with that building block approach and the way that different jurisdictions who might have different national policy objectives or might be wanting to align both the capital markets reporting requirements with the broader sustainability stakeholder reporting requirements that might already exist. And South Africa is a good example of that through all of the work that they've done on multi-stakeholder integrated reporting. Can you say a little bit more about the ISSB's thinking on that question of interoperability and what that really means in practice?
That's a great question. It's a very important one because, of course, in order to be that truly global baseline, interoperability is absolutely key. As you already know, we signed an MOU with GRI as far back as March last year, and we've been working very strongly behind the scenes with the European Commission to ensure the alignment between the European standards and the ISSB, so that we actually have a navigational tool that helps those jurisdictions that are trading, for example, with Europe, to navigate and use the ISSB standards and know what incrementally is required to qualify or comply with the European standards where that's required. Likewise, also, what's very important is to bear in mind that in that regard, because we only have 2 standards so far, we've referenced in S1 several other guidance that can be used, which includes ESRS and GRI, also includes CDSB, and also the industry standards. What we've done with those is that we've actually also encouraged use of the industry standards, which also go beyond climate to include certain social metrics, and those can also be referenced, especially specifically from an industry perspective, which not only does it help to get an idea of what metrics investors are looking at when they're looking at sustainability-related disclosures, but it also enables companies focus on reporting that more closely suits their specific industries. And that, we believe, will also reduce the cost of reporting and enhance the ease of being able to commence sustainability reporting. So interoperability, just like proportionality, which deals with smaller entities, which of course is important when you're talking about scope 3 and including global supply chains in your sustainability reporting, is absolutely key for us. Those are 2 very, very important words.
Susanne, I'd love to hear your perspective on that as a practitioner. So how, for a company, what does interoperability mean for you, and how are you making sure that you're not having to spend your time reconciling between one standard and another, but you've really got that sort of strategic, seamless, joined up approach to how you leverage and report against different standards, which partly are asking for different information for different stakeholders, so different questions that they might be trying to address.
Yeah, that's absolutely key. So, I mean, these standards are meant to complement and really consolidate existing disclosure standards. So as a company that is operating in different jurisdictions, this will be incredibly helpful. And it's also likely to sort of reduce the cost and complexity of trying to report using different frameworks. So if we're looking at achieving interoperability with the standards, we will need to look at aligning our reporting standards using the guidelines. So this will include standardizing our reporting methodologies, ensuring capability and comparability with each of the global entities. It will also be very important to look and collaborate with our stakeholders, our industry peers, and the supply chain partners, so that we harmonize our reporting approach and also try and bring forward a unified reporting framework. And I think for me, maybe an area that I want to highlight is really the concern around the use of financial materiality. Because, you know, when we look at sustainability issues, and we do look at financial reporting and traditional materiality, sometimes what from a financial perspective may be material, may be very different from a sustainable perspective, especially when we start looking at what may be material to the community and the people being impacted by the entities. So it might be material to the individual that is being impacted, but it may not be material to the company from a financial materiality perspective. So when we start to have these sort of differences, and I think those are areas that for me, it starts to become a little bit of a concern around how do we achieve this sort of standardization around the business, because you do have very different stakeholders as you start looking at very different aspects of the value chain. So it's areas that we would need to think about and say, how do we apply this in a little bit more depth?
Ndidi, do you want to share your thoughts on that? Because I know that you talked earlier about the investor materiality lens. And I know that, of course, from some of the investors we work with, and indeed the collective response they shared with the ISSB as part of the consultation on the standards, investors often have that fiduciary duty, but frequently want to understand some of the impacts that Susanne was talking about there. They're interested often at a sectoral level or at a national level. They want to understand the impacts organizations have. So often they need information beyond the narrowly financial or the immediately financial, so want to understand a longer term perspective. How's the ISSB really thinking through that question of materiality and how it gets applied in practice?
I mean, it's a good question, and it's an important question that I think is being unpacked because it is so key. I mean, how we've described sustainability and the standards is we've acknowledged that value creation for the company is inextricably linked to the value creation process for the stakeholders with whom it works, the society and the economy in which it operates, and the natural resources which it draws on. So there's a dynamic materiality process that happens, and obviously what is material, what may not be material now, could be material in the future. So the whole process of risk management, identifying, assessing, prioritizing, and monitoring sustainability-related risks and opportunities is absolutely key in that regard. And the whole point is to distill those material indicators that because we're focused primarily on providing comparable, consistent, and reliable information to investors and global capital markets, that's where our focus is. And that's the reason why we are the truly global baseline, because we focus in that regard from that perspective. But then also when you think about the fact that by requiring scope 3, we're also asking for supply chains to be looked at, value chains to be looked at, and to be looked at in the context of a business. So it really also encourages businesses to assess, respond, report, monitor, and continue to identify risks and opportunities on an ongoing basis to primarily ensure that we are providing investors with the information that they require in order to channel capital into the transition. And I think that's also a very important aspect, that through this process, we're essentially encouraging the leaning in on transition planning, because you don't start from a perfect space, you essentially evolve with time.
And I think that for most organizations, and Susanne, sounds like this is where you're approaching reporting. The ISSB is not suggesting that organizations should stop reporting to other stakeholders. It's a recognition that there's a specific user group around providers of capital, which was where financial reporting has started, and recognizing that that information set and needs have broadened out. So really providing the subset of information that is particularly relevant for that community, rather than not reporting anymore to stakeholders. And I think that that's why your comment on the MOU with GRI at a global level, but then also as national requirements come in, the EU you mentioned also has that double materiality lens, so reporting to broader stakeholders as well as the capital markets. And I know that in a number of the other jurisdictions you mentioned, similarly, they're looking at how to cover both of those. And Ndidi, I don't know if you wanted to say anything more on that.
Yeah, just to say, I think one material difference as well is that we're requiring for sustainability related disclosures to be at the same time as the financial statements. I think that's a major shift, because what we're seeing now is that very often the sustainability or climate related disclosures are 6 months, sometimes 9 months after the financial statement. So they're not really used for investment decision making. That's absolutely key. So having these sustainability related disclosures at the same time and at the disposal of the investors will make a material difference from our perspective. And in addition to that, obviously the information becomes more decision useful, but we're very keen for that to be in a cost-effective way, which is why interoperability between the standards is so important, and which is also why it's so important to allow different jurisdictions the flexibility to adapt these standards in addition to their jurisdictional requirements, and to choose how to apply the transitional reliefs so that the burden of reporting is not that heavy on preparers, and especially on smaller entities that are coming to sustainability reporting newly, bearing in mind always that the prospects of this baseline is to unlock capital to flow in the direction of more sustainability. One more point I wanted to add, obviously, is assurance. So the other element is to ensure that the assurance of data is key. And so the work of the IASB at the moment, in terms of being able to come up with the assurance guidelines, is also key, because it's not just about having comparable, comprehensive information, it's also about having assured, verified information that is trustworthy.
Yeah. Suzanne, I'm conscious that we're nearly already out of time. That's gone very fast. Can you share any reflections to the points that Ndidi was just talking about there, but also your hopes for the future and what you would like to be seeing happening as these standards get rolled out and adopted?
Thank you. I think for me, looking ahead, I see and I hope for greater integration between the financial and non-reporting financial standards, looking at much more comprehensively around our financial performance and trying to bring that together. Obviously, as we are looking at this all at the same time and preparing it, it's going to be a lot more work and a lot more demand on the year end. It's already challenging from a financial perspective, and now trying to bring this in is going to be even more challenging. So what is important is that, the standardization is going to be even more critical to ensure that it's a seamless process. We need to ensure that we are gathering the information throughout the year and not just at the year end. And I think Ndidi is right in the saying that, traditionally you finish your financial reporting and then you have time and you focus on the rest of the things. And it's no longer going to be like that. So we'll need to see how we can bring that together. And it's really around continuous education and collaboration to ensure that we drive these changes and make sure that the changes become embedded and become embedded effectively. We will also need to ensure that from a sort of strategic perspective, management is aware of what this means from an impact on people and, our process and planet. And I think for us, what is important is, our stakeholders really look at the sustainability side in understanding and wanting to buy our product. So for us, it's not even a matter of something that is a choice, but it's something that we need to do. It's something we really want to do. So really, to prepare adequately, we really need to engage early. We really need to understand what these standards are meant to do and really meant to facilitate a smooth transition, ensure that, there's compliance when these standards become effective.
Fantastic. And Ndidi, can you share from an ISSB perspective, you've started to consult on some of the potential future topic areas. Of course, as you highlighted, S1 is already asking for the broad set of information, but the plan is to build on S1 and S2, looking at other topic areas. So could you say a little bit more about that, the kind of responses that you received, and how organizations can start to get ready?
So we got over 400 comment letters, which for us is a lot. A summary of feedback really was that we are being asked to focus very much on supporting the implementation of S1 and S2 to start. There was a lot of demand for that, also in terms of enhancing the credibility in the implementation and application of these standards. We also heard back that there was a request to have a better understanding of the overall vision of the direction of travel of these standards. Just for information purposes, we did put out an ask to say we had prioritized 4 key agenda priority areas: human capital, human rights, biodiversity and biodiversity ecosystems, and integration and reporting. And we got extensive feedback on that we are only just beginning to unpack, and we will be unpacking for the next few months. It's a very exciting time, and really understanding what the market is saying to us in terms of how to prioritize is going to be very interesting to decipher, to really make sure that we hear the market. But what was very strong is we have S1 and S2. We want to be able to implement those. Please make sure that you provide the necessary capacity building support and implementation support to ensure that that is done right. And there were obviously also responses in terms of the prioritization of one over the other, and that's exactly what we will be unpacking over the next. We've set out a 2-year period for further researching these agenda priorities to ensure that we're progressing on the development of future standards in tandem with what the market requires.
And in terms of your final thoughts on what organizations should be doing now to get ready?
Oh, definitely read S1 and S2. That's very important. Implement TCFD, those 4 pillars, those very important 4 pillars of governance, strategy, risk management, targets and metrics, underpin both standards, very important. As you know, we're working very strongly with interoperability. So whatever work you've done before, whether you're working with GRI or CDSB or the SASB standards or integrated reporting, that will definitely flow in to help with the implementation of S1 and S2, which is geared towards providing decision useful information. Definitely internally, look at your systems, ensure that you're not taking a siloed approach to sustainability reporting, because I think that's also one major shift. And I think Susanne spoke to that as well. So the fact that the IFRS sustainability standards is written very much in the language of the IFRS accounting standards. We always say that we shamelessly borrowed concepts from the IFRS accounting standards. It means that there's a whole new set of professionals that are looking at these standards and looking at the application of the standards. And Susanne has also mentioned that, the CFOs, so the financial departments within the organization, and of course also the boards, what's really important is tone at the top. Because it should be led by the highest level of governance. And the whole idea behind this is really to strengthen risk management within the organization, because sustainability-related risks, especially climate-related risks, are very real and cannot be ignored. And they should be looked at from the perspective also of anticipated and future financial effects, so affecting cash flows and companies' prospects. So hopefully as a result of this, which is now truly a global effort, especially with the IOSCO endorsement, we will end up with better disclosures, better information, better investment decisions, and a leaning in on transition plans.
Well, thank you both. If anyone wants to find out more, I think there's lots of guidance and ways to help you get started on the A4S website, and links into more from the ISSB and great case study examples. We've just done an update to our navigating the reporting landscape if you're wanting to understand how things fit together, and if you're not already familiar with all of the acronyms that we were shamelessly using throughout this session. I think it'll help you to really decode some of the language in this area. And a great thing to note is that since the last version, it has got shorter. So I think that that's a great sign as well of the points that we were discussing there of a lot of the consolidation that has happened in the standard setting world over the last couple of years, driven by the ISSB.
Yes, maybe worth mentioning as well is just that at COP28, just like we promised at COP27, where we established the partnership framework, we will be publishing the Knowledge Hub. So there will be a lot more resources and materials and online learning courses so that really everyone can come up to speed. We're absolutely committed to implementing capacity building together with partners to ensure that, again, the ease and the burden of reporting is reduced.
And we can make sure that we add a link once that's live to the A4S website so that people can find it easily. And really pleased to be working with the ISSB to help with that capacity building. So through the guidance and the tools, but also the workshops that we do and with our CFO and accounting and investor networks. So please do reach out to the A4S team if you want to find out more. But a huge thanks to Ndidi and to Susanne. Lots of food for thought, lots of really great top tips. So thank you both.
Koushik, it's really wonderful to have you back with us at this year's A4S Summit. I'm going to briefly give an intro to you, but I think you've been involved in so many different activities that are relevant to today's discussion that I'll only have time to mention one or two. But of course, your day job is as CFO of Tata Steel, and you've been involved in A4S's work for many, many years. So first of all, really taking a leadership around integrated reporting developments well over 10 years ago. You're a trustee and board member of the IFRS Foundation. You were heavily involved as a member of the Task Force on Climate-related Financial Disclosures on the IIRC board, and then Value Reporting Foundation, as well as, of course, playing a key role in India advising the Indian securities regulator, SEBI. So a few of the many roles that you've had to really influence reporting over the last decade.
Thank you so much, Jessica.
Now, if we start with some of those developments, and we've seen over the last decade a just transformation of the mainstream of reporting, and of course one of the biggest developments recently with the announcement this year of IFRS S1 and S2. Can you just say a little bit about why adoption of those standards by the ISSB is critical for you and other businesses in your region?
So, Jessica, thank you very much for inviting me and having me on this summit. I think the way we have been looking at over the last decade, there has been several frameworks of reporting, and sustainability reporting, reporting on non-financials have become as critical as financial reporting at this point of time. And there has been several frameworks in existing, whether it's the IIRC that you mentioned, the SASB, the CDP, the GRI, the TCFD, and so on. And everybody's intent was to ensure that the reporting quality on non-financials became more transparent, more open, more consistent, comparable, and ensures that it also helps preparers and users both in understanding the whole journey on sustainability reporting. So it's been an effort, a multi-forum effort, but it has also created a certain amount of overload on preparers and also on users, because there are several frameworks, as I mentioned, and if you lack a global harmonized standard, it often leads to disparate conclusions, and therefore non-comparability makes it difficult for multiple things. One, for flow of capital, for understanding which transition journey is being fairly depicted and transparently depicted, and how should this be considered by these several stakeholders, not just the providers of capital, but the community and the other stakeholders that any corporation is engaged with. So I think this is something which is important to create a globalized and standard which is in harmony and can be applied across geographies in a consistent manner. The other thing which has also been happening is some geographies have taken their own initiatives in terms of setting sustainability reporting standards. Case in point is in India, with the business reporting and sustainability reporting, business responsibility and sustainability reporting, the BRSR standards came into force this year. In Europe, you have the European Sustainability Reporting Standards, the ESRS, which has also come in. So the local requirements and the global requirements needs to actually ensure that there is a convergence and there is a alignment, more importantly. And especially from a company's perspective, if there is cross-border operations, if there is cross-border financing that is being raised, the issuers will look to report in a consistent manner. And I think that is something which was also the need. And therefore, when IFRS Foundation first announced the formation of ISSB, it was the first step towards ensuring that, like in financial reporting, we have IFRS or IASB as setting the financial reporting standards, which is adapted globally with perhaps a very small level of customization to local requirements. I think the ISSB will also fulfill a similar kind of a role. And I think that is in that context, the S1 and S2 is the first very critical steps being taken. And I'm sure that this will continue to be the journey, and this will continue to be the adaptation route for the rest of the world, who can look at one globalized standards, because after all, the ISSB has been formed, including various of those frameworks, whether it's the IRC, whether it's now the TCFD or the SASB and so on. So I think we are moving towards a harmonized standards, and that's one of the most critical things.
And you touched on there both, you know, some of the steps forward that have happened in India, in Europe. As a company operating globally, how are you navigating through? Because of course, from a regional perspective, there are often different policy priorities, so that drives different reporting requirements for different jurisdictions. So how, I know that one of the words that has been used a lot is interoperable, but in practice, how do you see that playing out, and how are you sort of making sure you're not having to double up on all of the reporting you're doing to meet the requirements in India, to meet the requirements in Europe and in other jurisdictions where you operate?
Yeah, so I think we being primarily listed in India, our fundamental reporting obligations will continue to be in India. And I think the Securities and Exchange Board of India has come out with the BRSR, the Business Responsibility and Sustainability Reporting Standards, which actually covers a fair bit of the frameworks that are already in place. As you know, that the top 150 companies in India are now also required to get a certain level of assurance on a subset of the BRSR, which is called the BRSR Core. And this will then become for 250 companies, and the journey will start. So I think the point, important point is there is a fair bit of alignment of BRSR to, for example, the TCFD recommendation. And it also takes into account a slightly principle-based approach, which gives the flexibility for companies to report, because there's also not one size fit all approach, which is important. And I think SEBI, being a member of the ISSB, will also endorse in due course of time the ISSB standards. And I think like what India has done for its financial reporting standards, where the base framework is the IFRS, but has kind of customized to some extent the IND AS, the Indian Accounting Standards. I expect that in the future, we will see the BRSR being more aligned to the ISSB. You know, it's not important on the name of the standard, but the substance of the standard. So I think the substance will be more important than the form. And I think so long as the substance covers the areas that ISSB is working on and has already disclosed, it will be helpful. And then once you have the substance in place and aligned on the topics and the coverage, then the duplication of the workload or the duplication of reporting gets minimized. And if we have requirements of non-financial reporting in different geographies, that can adapt as a subset of the reporting. So I am, always an optimist in terms of seeing the positive side. And I think if as a company and as a preparer, our business strategy, our decarbonization strategy, our nature-aligned strategies are all in the right direction. If we get the taxonomy right from an ISSB standards perspective, and there is a alignment on the taxonomy, then I think we should be able to report what will be compliant to all of the frameworks. And I think anyway that the other frameworks are narrowing. So it'll be a question of your primary framework would be RSR. If there's a flexibility to do more than BRSR through the ISSB, then we will certainly do that. and we will ensure that we will continue to our journey on getting it assured independently, so that the user of the non-financial reporting information and analysis is benefited and assured of the transparency and consistency.
And so in some ways, you would see almost the ISSB standards being absorbed into, over time, the standards that SEBI puts in place for companies in India. So effectively, you're still only needing to use one set of standards, but they cover a number of different areas.
That's correct. That's my expectation, that that's how the journey will evolve.
Yeah, or your hope potentially as a preparer to make life easier. In terms of the some of the details within those standards, of course, the BRSR, so the business and responsibility and sustainability report requirements, cover a much broader set of issues than the current S1, S2. S1, of course, is overarching, so has the scope to bring in all of the material sustainability issues. S2 focus specifically on climate. ISSB has been doing their agenda consultation to look at some of the future issues, so things like human capital, human rights, biodiversity, and nature. Can you say a little bit about how you're already reporting on some of those issues? And of course, they're all interconnected. So one theme of the summit is looking at the connection between climate, nature, and people, and we need to really understand the impacts and dependencies across those different areas to be able to take action in any one.
Yeah, so I think it's a very important point, because so what we did is, our starting point was actually the 17 SDGs. The UN SDGs provides the framework to look at 17 very critical non-financial matrices and areas that affects a corporation and what a corporation can affect. So we mapped the relevance, importance, and KPIs of these 17 SDGs to us, and how we impact them and how these impact us. And from within that, we then looked at BRSR, and it's been a very important learning journey for the organization to look at it, because BRSR talks about all of the 17 SDGs in some form or the other. And you talked about human capital and human rights, and I think that was a very important element, and BRSR does require us to talk about it. And therefore, we started looking at individual KPIs within the human rights vertical, and ensure that we have the ability to do what we need to do and report what we are doing. So I think if you look at the part of how these standards and how the coverage will expand over time, I think it is good to use the UN SDG framework as a foundation basis, and then look at the standards, because BRSR, from a coverage point of view, is very wide and deep. And therefore, we found that we could, if we'd go by that route, then when ISSB comes out with the newer parts of the agenda in their formulation of standards, I think we will be able to adapt to it. So I think, I think it is important, because the non-financial reporting or the ESG reporting it cannot be standing individually on its own. There is an interdependency. For example, between nature and climate, we cannot achieve net zero unless we achieve nature positivity. And therefore, there is a huge amount of interdependency between nature and climate. Similarly, if you look at extending nature to the quality of lives, or whether it is in other resources like water, ocean, etc., you'll find that you can use the SDG framework, which has been one of our baselines, to assess where we stand and what we can do, develop internal strategies and KPIs and the path forward, and then report on the same. So I think the interdependency of some of these will be very critical to establish. How do we measure materiality? How do we measure on the same basis, hence taxonomy? And what is the extent of risk and opportunities that the company assesses would be very critical. And I think that path is being followed by ISSB, and because ISSB now is taken on board TCFD, for example, and TCFD has had a wonderful path in terms of setting the standard or the framework to look at strategy, governance, risk, and opportunities. And I think that is same standard, same framework if ISSB follows, because TNFD, for example, has taken the TCFD framework and worked on it and built on it, and we had a release in September. So I think there is a need for convergence, and there is a need for setting the same baseline for other non-financial areas.
And you touched on quite a few of the different nature-related areas. Can you say a little bit more about some of the people dimensions as well? Because, of course, that's one of the challenges that businesses are facing at the moment, of how do you, particularly when it comes to things like the transition, how do you navigate through and make sure that some of those human capital needs, so new jobs that might be created as a result of the transition, but also some jobs that might no longer exist. So how do you grapple through some of those challenges and also then disclose some of those issues? Do you think the frameworks already address some of those challenges?
So I think the transition pathway is becoming more critical than the endpoint, and in more ways than one. And I think that is something that we need to be cognizant of. And when we talk about transition pathway, we talk about multiple things. First is, when you talked about human capital, it's about the skills and capability of the people to help in this transition, and what skills are required for this transition. And it's not going to be easy. It's not easy. We're seeing it in multiple places. Transition is laced with a lot of apprehension and the ability to live through the transition. So I think the transition pathway is critical. How you define it, how can it be fair and just, and how can you reach the other side of the line? The second part on the human capital is certainly we are seeing as businesses and as across sectors and industry that there is a huge amount of opportunity on this transition and after the transition, and therefore of course jobs will be created, new jobs, new skills, and new capacity building will be required. I think it is important for all corporations to focus on it and ensure that the reskilling of people and building of capability and capacity is critically addressed. And there is a whole world of stakeholders who are outside corporations and whose lives are getting impacted. The entire value chain or supply chain people are getting impacted, and has the potential to get impacted. And therefore, how does that get addressed in a manner such that it is fair? So I think there is every corporation, every preparer has to think about these transition risks and transition opportunities. And in order to have a structured approach, one has to also take the relevant stakeholders along, whether it is the local government, regional communities, suppliers, small and medium sectors who have deep interconnectivity with corporations, and then work with them to ensure that the transition is fairly done, and the transition has an impact which is within the tolerance limit of all stakeholders, because this transition is not easy. The benefits of the transition is post the transition. So during the transition, there is an impact, and how can we responsibly handle that would be critical. And how do we disclose the same so that the users are also aware of the transition risk and opportunities.
And one of the things that you touched on there was also thinking through the value chain and the different impacts and dependencies. I know that that's one of the other developments in terms of the Indian disclosure requirements this year, is to be reporting along the value chain. So one of the sessions that we had earlier, which I know again Tata Steel has been one of the leaders in this area, so piloting the approach, was exploring innovations in accounting for greenhouse gas emissions along the supply chain, which is the work that Professors Kaplan and Romana have been leading. Are you able to share any insights from the pilot that you've done on this approach, and how you see fitting into the reporting developments we've been discussing?
Yeah, so I think in conversation with Karthik, when he was talking about the e-liability framework, the genesis of that was the whole GHG emission accounting and measurement methodology has been effective so far, but we face challenges when it especially comes to say scope 3, and that is when multiple people will measure and account for it differently. And the e-liability framework actually goes fundamentally to the traditional financial accounting principles, of a double entry and single measurement, and it moves into the allocation of carbon to each product level. And I think that was quite fascinating. And as they developed the thesis and published it in the HPRs, it actually caught the attention and has caught the attention of many people, because it provides a mechanism for transferring the e-liabilities across the value chain from suppliers to customers and so on. So it's not residing in one place. As the product or the service moves, the e-liabilities move, and that's quite a fascinating parallel to the financial reporting standards, and perhaps because both of them are subject matter experts in financial reporting areas, I think it became an important part. So when Karthik and I had a chat, and he was talking about various pilots that various companies are doing, we also thought, why not, being a hard to abate sector, do two pilots actually, two in two different geographies. And so we finished one, we are finishing the other one, and I think the hypothesis is getting tested. We are looking at how this can be scaled up, because these were pilots, and whether that reflects on the business strategy of the company and what we need to do as we measure the carbon in a different way and measure it more holistically. So the completeness is an important bit. Not double counting is important, and ensuring that how do we actually transfer the liabilities from the source to the next level of the value chain. For example, we manufacture slag as a byproduct, which goes into a cement industry. So as we produce the slag, or we produce the hot metal, which is the molten iron, slag is used as a byproduct. But that byproduct is used, while it's a waste for us, it's a value for the cement industry. So if the transfer of the value is happening, how do you look at transferring the carbon embedded in the slag? So these are mechanisms. This framework allows us the mechanism to test that hypothesis. And I'm sure that we will certainly move on into multiple pilots and see as to how scalable it is. Finally, I think this framework also will have to find its place in a standard somewhere, and I think that will be the time when this will get into operations, because this is also something that has to be backed up by a huge change in which carbon is measured and used in decision making. So much like how in financial reporting, there is one definition of revenue and one definition of cost, and there is one way in which the value of a product or a service is transferred from the producer or the service provider to the user. I think the reliability framework provides such an opportunity. So more work to be done, but it's a very fascinating and a very critical framework which is emerging.
Yeah, and I agree. I think it's as an accountant myself, I found it really fascinating in terms of the suggestions. The challenge is, how do you go to scale, and go to scale quickly, because these issues in terms of the transition, as we were touching on, it needs to happen now and at a quicker pace. We can't wait for accounting to catch up. Now, final question, Koushik, we're sadly out of time, is just to ask you what your key hope for the future would be, where if there's a message that you would like to leave to your fellow CFO and wider accounting and finance community, what would you see as the key hope for the future?
So one of the things that I have always believed and said in many occasions, that we are now moving into corporate reporting, which is no longer financial and non-financial. That convergence is happening at a very fast pace. So as custodians of financial reporting for any organization, corporation, non-financial reporting has also become as critical as financial reporting. With assurance standards coming in, with reporting standards coming in, this becomes a very critical part. And I think the financial and non-financial will converge very soon. And if we actually look at the e-liability, you'll have a e-balance sheet in a short period of time with e-assets and e-liability. So I think the question will be to scale up, to understand standards and understand how the business can get aligned to the reporting standards, how we can enhance our reporting transparency, how we can measure the non-financial KPIs more effectively, how can you disclose the narrative more effectively so that the user understands the business, not just by financial outcomes, but also by non-financial outcomes. And then look at whether it is providing capital by the financial providers of capital, or whether it is just the community who depend on the corporation's sustainability for the future, because they depend on the corporation, or whether it's suppliers, whether it's large suppliers or small suppliers, and of course customers, and even employees, to understand the whole framework of not just how much profits the company is making, but what's its impact on nature and climate and various other parts of the non-financial space. So I think this is a space which is exciting, which provides a huge opportunity for youngsters getting into the profession or who are in corporation. This is a huge learning opportunity, and this space can make a difference to the planet and the society we live in. So I think I'm excited when I look at the developments. I'm very happy to be part of this development of the last decade. And I think we just need to be fair, unbiased, and ensure that the reporting standards and the measurement standards continue the journey to make corporations more responsible and to make the society better.
Fantastic. Well, I think that's a brilliant note to be ending on. So thanks a lot, Koushik, for your time and all of those insights that you've shared, and for your leadership over the last decade.
Thank you so much, Jessica. Thank you.
That's all we have time for during this session, but we will be back in 1 hour when my colleague Martina Tessari, who's A4S's head of Europe and globally leads our reporting activities, will be exploring the latest developments in Europe, looking at some of the challenges, solutions, and the available resources to help you implement the European sustainability reporting standards. The standards impact companies in the EU, but also those with European operations and indeed along the value chain of European companies. So do tune in and find out more, and we look forward to seeing you then. Thanks a lot.